Hello, it's Robert Miner with Dynamic Traders Group with today's DT Daily 3-minute update and trade strategy, where we bring your attention to a potential trade that's imminent or at least coming up within the next few days. All of our 3-minute updates are also educational, so even if you don't trade the markets that we're talking about in this particular update, is you can apply what you learn to other markets and other time frames. Okay, let's get started. Well, I'm recording this on Friday, May 3rd at about 3:20 p.m. So there's about an hour, a little less than an hour less of active trading in the stock indexes. What I'm going to take a look at is the ES. I'm going to take a look at the pattern position, how it at least warns us of what the higher time frame trend is and what it needs to do to confirm that trend and set up a specific trade strategy. So this is 60-minute data in the ES coming down from the all-time high on May 1st, just about 3 days ago. Or 2 days ago, actually. What do we look at pattern-wise coming down? We use Elliott wave a lot. Looks like 5 waves down. If that's the case, the higher time frame trend, that would be what we call the daily trend, or even the weekly trend, should be bearish. And that's not projecting some kind of crash, just that we should have another few days of net bear trend without exceeding the May 1st high. So that would be what we call wave 1 or A. I got a question mark there. That would mean we would be making a correction. Now this is data right up to date from the time I'm recording it on the hourly data. So let's just take a look at the pattern coming up. Potential A, B, C. Potential, I say, hasn't been proven by any means. What would indicate that's indeed an ABC correction? It's finished and the bear trend is going to continue to a new low. Well, trade below the wave below. It's that simple. Really simple stuff. That's quite a ways below the market. Let's take a look at where the high is of today. The high today, and it's obscured here, but I'll tell you what it is. It's right where this at the 78.6% retracement. Mark this down. That's usually the maximum retracement for a correction. So the 78.6% retracement is only useful information if we believe we're making a correction and we've reached the extreme of what typically a correction is. And why is it obscured here? That's because I've measured the range of what I labeled a wave A. I've projected that from the wave B low, and it's so close it's less than 1 point difference. So that would be the not only the ideal end of wave C target, it would be the maximum for a correction. Do know, and we always trade on what we know that the high of today is in a position to complete an ABC correction. We know if we do not exceed the high of today, but we decline below the wave B low, that this is a completed ABC correction. Well, we never know pattern-wise, but I would give it 90+% probability, and it would be an actionable trigger that we would then continue lower. So that's how we look at pattern and price levels and some time levels also. The high was just a couple of bars past what is typically the maximum time for a correction against a 5-wave trend. Now, I don't know if it's going to decline and take out the wave below. Nobody knows that. What I do know is that if it does, without exceeding the high that was made today, then more than likely the higher time frame trend is bearish and it's going to continue to a new low and be sideways to down into a new low for at least another 2 to 3 days. And that's a tradable setup. That's it for today. Take care.